All right. 3, 2, 1, go. All right, we're good. We're live. Welcome back to episode 2 of Micky Does Bitcoin. You're here with Mr. Micky and PBitty. How you doing, PBitty, sir?
I'm good, buddy. I feel like we may have cheated the people a little bit because we said we would record unless we got 100 views.
Oof, what are we at?
We're struggling. I don't know. I think we're like at 70.
Oh, God. All right, we'll record it, and if we get another 30 views today, we will.
I have an idea, though. See, here's the thing, Mick. This is like where the marketing side comes out. We need thumbnails on our videos.
Yeah.
And if you look at some of the biggest degenerate YouTubers, right, like Carl the Moon or Crypto, apparently there's something about having a ridiculous. Have you seen their faces?
You got to get the close up.
Yeah, but they're always
crazy link bait title
and mouth open. Like apparently, I don't know if like they're like this.
Yeah, and it's like, oh my God, Ethereum going to $3,700 in the next 30 minutes.
No shit. I think that somehow the algorithm, if you have your mouth agape, I think it brings people in. I don't know why, but you and I, we should be to pose like.
Love it. All right, for the next one, we actually need to send this out to people as well.
Yeah, we do. We actually should let people know. We should let people know it exists.
We probably should. I don't know where these views are coming from, but I've sent it to 2 people. So
okay, all right, man. Well, price action.
Let's go. Price action. All right, we've had interesting, choppy kind of couple of days. It's only 4 days ago that we last spoke to the people. So where are we at? I mean, we're still in this range. If you're a short-term trader, it is a pretty difficult range. You'd either be waiting for a dump down of the 21-week moving average, or you'd be probably waiting for confirmation above, I don't know, 60, 61, 62. But look, it's still looking good. We're still up in this high 50s. I think continuation. There's not really much to talk about. What do you got to say, PBitty?
I'm
looking at the daily.
If we, I don't even know if you said welcome to the show. This is Micky Does Bitcoin, but if we don't get to 75K, I don't get to change the name to include me. So I think we could be struggling. I mean, I look at the price action right now, and like this is not a top. And I'm seeing a lot of people on Twitter like this bearish people calling bearish things out there, and then there are others that are like saying, does this look like a top? Like, does a top normally give you 12 weeks to sort of dollar cost average out?
Yeah,
not really, right?
Not really.
But I've kind of drawn I've drawn a bit of an ascending triangle on there, and I've taken into account that we had that sort of deleveraging event, that liquidity grab that sort of jumps out of it. We could consolidate for another month. It's possible, right? Like we don't necessarily blow out of this range yet, and alts could continue to run. But at the same time, we just don't know when this thing is going to explode to the upside. But I think we do compress into this ascending triangle. I think it is like volatility is going to lower, and I think volatility goes down. But the longer we stay in this range, the bigger the explosion to the upside, right?
Usually it's the opposite as well with these Bitcoin consolidations. Usually it's there's a floor and the triangle is actually the opposite, and then it kind of breaks out. So it's interesting. And I think, look, it went up so fast since December. We need this couple of months to have a breather, and also altcoin. We're having a mid-cycle mini altcoin season as well. So things are looking okay.
Yeah. So should we jump into maybe just some commentary around Lynn Alden? And I think it kind of relates to what we're talking about here, and just some of the bearishness and how people feel about it.
I'm going to quote you here. Just took something from your report. Interestingly, Bitcoin both broke out and broke down since then, which was somewhat expected. You set 2 different price ranges. So I guess because we're in a bull market, your expectation is that we would break out, but if we didn't break out, then perhaps support would fall. But we've been through both. My view is a little bit slightly different. I've been watching these liquidation events with interest because I follow one of the bot alerts that alerts you at the point where there's a liquidation event. At some points, my Twitter feed is completely overtaken by these alerts. Like, it's incredible the amount of liquidations happening. And I'm just wondering, is there potentially too much leverage? Is there too many people trading with too much leverage and too much risk in the system? And that's that's making it easy pickings for those who can move against them or counter trade them.
Yeah, and so yeah, going back to that point about the breakout or breakdown, yeah, basically we were watching this kind of Bitcoin consolidation play out, and so if you start making lower lows, that's not good for kind of the technical signal. You obviously want to start making higher highs, and so there are certain kind of points I was watching, and I was like, okay, if it breaks below this level, that's a little bit concerning. If it breaks above this level, that's great. My base case is it would break out, and then the funny thing that happened was it broke out and then it broke and then it went below the range and then it so I was like, this is actually a mixed signal here. We have to keep watching this. And so one of the risks to watch out for is that during the 2013 that kind of previous bull market, the one two bull markets ago, you had that kind of double cycle. Anyone who looks at that long-term log chart, you had a big blow off top, then you had a really deep and long correction, then you had another one. And so the question of this cycle is it going to look like 2017 where it kind of just keeps going up with 30% corrections, or is it going to have a much weirder kind of pattern where it goes up and then it has like a 6 month or longer kind of big correction, and just because we have investors that are price sensitive and kind of they don't want to have a big drawdown. It's just kind of useful to watch that and see what's happening. And obviously, different people have different characteristics for how they want to trade it or hodl it. And so you can have like a strategic holding, but then also you want to focus on what the tactical price is likely to do over, say, a 6 to 12 month period. And so I just track that for readers to basically see how does this asset class compare to what other asset classes are, what are the risks, how bullish are we with, say, a 6 month view compared to the long-term view. And so generally what we saw with this latest liquidation was mostly good news in the sense that we cleared out some of the leverage, and it bounced off of kind of those areas we'd want to see it bounce, like where there's those metrics that determine like the SOPR, like that ratio.
So Mick, how are you thinking about this, mate? Do you see a double top event? Do you think we could have a serious downside move? And how are you thinking about it compared to 2013 versus 2017?
Well, look, it's interesting. I think we discussed this in like January or something when it was going vertical, and we said there might be a mid-cycle, May, June, July, massive correction like 2013. And it's a max pain event, and then it takes months and months to to build back up, and then have a later stage bull rally before potentially a bear market. And it's looking like it's definitely a lot different to 2017, because 2017, when you look back on it, it was predictable. They did have this 2 to 3 month consolidation period around 3K, but the pullbacks were very predictable. They went back to the 100-day moving average. As it got more bullish, it dropped back to the 50-day moving average and then continued on for the big blow off top. I just think it's more like 2013 in that it may be a few months, maybe another 2 months, like you said, of sideways to gather momentum, to build momentum. And then, yeah, potentially another leg up. What do you think?
Yeah, look, I think like you said, we were both concerned about the speed at which this thing
too quick
was moving upwards. It was just too quick, and we were worried that it was going to have an absolute, at least it could have an actual blow off top and usher in a little bit of a bear market, because you just scare too many people away if you have a huge correction that's sustained for a extended period of time, kind of like 2013, which lasted 6 months before the double pump. What I think is extremely bullish is that we haven't gone down. I mean, we are sitting at these levels, and we're in this range, and we're in potentially compressing, ascending triangle. And the fact that we haven't done from these levels just speaks to the strength of buying. Because although we don't really look, the price action hasn't been strong to move up. It's not been strong to go down either. And one of the things that I think for anyone who's sort of new to this, or they're only just buying their first Bitcoin now, one of the things that can be daunting is some of the voices online who start getting extremely bearish, just based on what could be a very normal correction in the bull market, what we think is a normal correction in the bull market.
Yeah.
And I think what you got to understand, or that people need to understand, is that it is very normal to have bearish signals in a bull market. Like, you want to break structures to the downside, and you want people to be scared off. It's kind of like, Mick, what's your favorite comedy?
Oh, favorite comedy?
Give me a good one. Just give me a good one that's got well-balanced movie.
Movie? 22 Jump Street, for sure.
22 Jump Street. Okay. Built into 22 Jump Street, as an example, is, drama, a bit of heart, right? Like, you can't actually have fall off your chair laughs nonstop where you're falling even harder off your chair all the way through, it just crescendos all through to the end. You actually have to reset. Like, you actually have to get up off the ground, sit down, have a bit of drama, have a bit of heart. And that's what we needed. Like, that last rally was like being in a comedy that was just like fall off the chair funny all the way up. And you actually need to pause and take a breath, because it's very human to need to like reset those emotions, because you can't actually build FOMO upon FOMO and like, you can't have a movie that's funnier and funnier and funnier. You actually have to go through it. And so it's kind of like an analogy to the fact that expect bearishness, because that bearishness is good. That is the wall of worry. It resets the market. It allows people to sort of get back in their chair, and then we can go off to the next level. Or we can go back into FOMO mode, because there's a crescendo of FOMO. Like, we were looking at FOMO at that point saying, we're just going to go straight up. And we can't just, once people are thinking this could just go straight up, there's no new level of FOMO above it that we can go to that allows us to have continuation. It actually needs to drop back, and then we can go back to, this is going to go straight up again. So I think that's just for like, newbies who are trying to think about this from an emotional standpoint, and they're looking on it and they go, what when people get bearish, is this bad? Well, no, it's just it's a reset in the bull market.
Yeah, and everyone gets bearish during the pullbacks. Everyone has their own theory as to why now is the top of the bull market. And look, it has done a 3x since its previous all-time high. So if it follows 2017 at 3x was a $3,000. So I would say continuation. We're in a bullish kind of consolidation pattern sideways.
Yeah, I mean, if we look at the halving tracker, right? So, the current price is 57,000. You can see where we would have been in 2012. We would have been at $500,000 already.
By the way, let's see if it's higher once we finish this, because it always is.
Yeah, no, agreed. So I was going to bring that up too. So 2016, we're at 33,000, right? And we are tracking at 57,000. So we are well ahead of the 2017 bull market. You can see where we are in the process. And unlike, and to your point, we're consolidating now. So there's no reason why we're not going to, once we rip again, we're going to get back, I think, into that sort of, that yellow line is the average kind of bull market between the two. And I think that's kind of how we're tracking. And so let's see what happens and what the breakout looks like and the price action is, because if we pull back into that range, I mean, this is heading towards an average $300,000 Bitcoin at its cycle peak. If we do the average of the two bull runs.
And it generally is at an even number. A psychological number is kind of often marks the top, or we've seen in the last two massive bull runs as well.
Interesting, yeah. There's going to be, that's a good point. Yeah, you could. I mean, 100K is going to be a psychological barrier. I think you and I talked about a consolidation at that point, right? Or even a dump, and that could be the 20. That could be the double pump pullback, right? Or at least that's where I thought we might be.
Yeah, but with all this sideways action, you got to think that it's building up momentum, and it might just send it straight through.
The best chance of being sent through 100K with either little, like, call it consolidation, not dump, is the fact that we are consolidating and we have had so much Bitcoin change hands at these prices, which is sort of excellent, right? Like, this is the best. So it's hard for people to imagine. People look at it, they go, it's volatile because it moves up. I've got newbie mates who message me almost every day saying, "Oh my God, it dropped 3%. Why? Oh, it's back again." It's and it kind of drives you insane. But the reality is, we're in a range, and Bitcoin is changing hands. We'll continue through some of the metrics. So NVT, do you know this metric, mate? I can talk with.
Not really. Go through it with us.
Yeah. So NVT is essentially like a measure of, Willy Woo, he calls it monetary velocity. So what it's essentially saying is that there's the price, the market cap, which is price, right? Or a reflection of price is market cap. And then there's the earnings, which is the reflection of money being sent through the network. So it's like a P to E ratio, because it's sort of saying, like, the network is worth $1 trillion and every day 100 billion is sent. And so what it's interested in is that it's the higher that the money being sent through the network, the monetary velocity is compared to that market cap, is telling you that the value of the network, right? So as in when market cap is closing in on how much money is being sent, we're resetting, because market cap should be way higher to reflect the utility of the money being sent through the network. Because if the network is being used, that is a reflection of what the market cap should be. So what really we were saying here is it's reset, meaning that the amount of dollars flowing through the system is at its highest compared to market cap.
And now, this isn't trading volume. This is actual on-chain transactions. On-chain volume.
Excellent question. So this, I initially, when I first saw this indicator, was like, well, this could be bearish because this could reflect high levels of speculation if lots of money is flowing through the system. And to your point, they strip it out. They strip out the exchange volume. So it's literal volume flowing through the network, which is a great sign. I mean, it tells you that money is moving around. It's potentially moving to cold wallets would be a perfect example. It's being used for large remittances. People are consolidating. They might be using some form of custodial service, which is not necessarily great, but people are finding utility. They're sending it between wallets. One way or the other, utility is happening, even in ways that you might not imagine. It could be the underpinnings of the Lightning Network, right? So the more utility the more money flowing through the system, the better. So this is reset. Okay. But good question. Relative strength index on the monthly. I think this is interesting because what you can see here is a clear pattern, right, of where we could be or are in the bull cycle, and you can see that we go into very high oversold areas as we peak. But I mean, the call out I would make is each dot is a month, and so you can see in 2017, we spent 1, 2, 3, 4, 5, 6, 7 months just burning overbought territory as the bull market happened. So if you look here, we've probably got at least 5 months to go. If you compare it to 2017, and if you think about 2013 over here, we could pull back harder, right? Even in the consolidation phase a little bit, and then pull back up into that sort of red zone of 95 oversold RSI.
Yeah, and so RSI typically it's a lagging indicator that basically just shows the velocity and the momentum of the market. Now, interestingly, 2017 it peaked lower than 2013. So you'd be assuming that the RSI will go higher this cycle because it's been a stronger uptrend. It's been a stronger bull market.
Yeah, that's an interesting way of looking at it. Definitely. There's also the and you can actually see as well. In 2017, there was a real true dip in RSI in that mid-cycle. We don't see that in the price action here. In the price action momentum here, we're seeing that we just went vertical, right? And I think everyone's sort of looking around, it's this period of the market when we're consolidating that, Bitcoin dominance just dumps and altcoins run and everyone's favorite shitcoin is going to the moon. But what's uber bullish is, and you're going to talk about it, I know, at one point, is it's just part of the liquidity dynamics as money sort of rotates through the system.
Yeah.
I actually think this is William Clemente again, he's killing it up there. 78% of Bitcoin supply is held by wallets with no history of selling. I mean, that's insane, right? Like that leaves as little as 22%. And I think that the thing that clicked with me to bring this up this week was, last week we were talking about the fact that 14% of all Bitcoin has exchanged hands above 50K. I mean, the amount of money just sitting with safe hands, there's not a lot left over, right?
That's 14% of the total supply has changed hands. And if only 22, maybe a little more, a little less is being traded, it's a high percentage of the actual traded, the volume that's not in wallets that have a history of not selling kind of thing. Maybe I'm looking at that wrong.
This is just like compression, right? It's just compressing. And that's what drives that next move up. This was yours, Mick, I think, wasn't it?
Yeah, so basically, if you look at now, if you just look at the daily active addresses, so this shows, again, the use in the network. It dipped down really low on the 17th of April when Bitcoin started its kind of pullback. and it's trending up now. So as of fourth largest day of 2021, but you can see kind of, if you look at it even more long term, it's starting to trend back up, and so it just shows that maybe the bottom's in kind of thing, and things are going to start building up again. So
it might reflect as well. The only reason why I can imagine daily active addresses dump is that the sellers are relatively newbies. So they've bought their Bitcoin and they literally sell it all, in that sort of 1 to 3 month period when they're told to get in because now's the time, and then they sort of get scared and they go straight out again. So as it sort of builds back up, you could say it's a reflection of obviously not just utility, which we were talking to earlier, of the network and the expanding network, but it's almost the opposite of a fear index. It's showing people are coming back in. People are getting bullish again.
Yes.
We're welcoming them back retail even.
Come back. We're open.
This is what you were just referring to, the rotation again, right?
Yeah,
Where
absolutely.
are we?
So I think we're at a kind of mid-cycle alt season point. I mean, clearly alts are pumping. Bitcoin dominance has fallen. So if you look at Bitcoin dominance over time, it is at 45% at the moment. So at the bottom of 2017, Bitcoin dominance fell to around 35%. So that means Bitcoin percentage market cap as a percentage of the total crypto market cap. Now, in 2017, we did see a mid-cycle pump where Bitcoin had its run. This was in October. So Bitcoin had its run. Bitcoin dominance went back up to 70% at the peak of Bitcoin's price. And then alt season, the actual end of cycle alt season only goes for a few weeks sort of thing. And Bitcoin dominance fell. Now, it is falling now. So in January, Bitcoin dominance was 73%, where pretty much everyone was into Bitcoin. And alts were kind of trending sideways, not really doing that much. Some of the small caps were kind of appreciating in value, but generally speaking, the majors, where a lot of the liquidity is, were sort of trending sideways. And it's been going down since then. So it's now at 45%. I expect over the next couple of weeks, if this is a mid-cycle alt season, that we're going to see Bitcoin dominance rise when Bitcoin has another run up. And then look, I mean, Bitcoin dominance could be lower than 2017, 35%. We could see Bitcoin dominance go down to, lower than that. But you got to think of the liquidity. So it goes from fiat to Bitcoin into Ethereum. So that kind of often leads the altcoin rally, and then goes into larger caps, then smaller caps, and then everything kind of pumps. But it does happen in cycles. So usually there's like 2 cycles of alt seasons, and then it flows back into Bitcoin, part way. That's when Bitcoin has its run. So I think, again, it just shows that, a lot of some Bitcoin liquidity is coming out into these alts, because particularly if it's new entrants into the market, they're probably like, cool, we'll get into Bitcoin first. And then, they're looking at all these other altcoins, and, they're probably selling off their positions to get into other altcoins. What do you think, PBitty?
Yeah, look, I totally agree. I think it's great I think it's fascinating and bullish that Bitcoin is consolidating near its highs, and yet dominance is just dropping. There's parts of the game that are sort of ridiculous, and I lament, which is
insanity.
It's insanity, right? Doge is pumping to the moon, and Ethereum Classic is up a 10x over ETH, and Ethereum Classic was 51% attacked 3 times in August. It's literally got no security.
But it's
cheaper.
So
it's cheaper, and it's pumping. And so
that's what they think when they look at it.
Yeah. And so what it really is Rob Powell tries to sell the fundamentals of some of these projects, but I think really he's a macro guy, and he looks at behaviors, and it's a behavioral play because it's just liquidity rotating through the system. And you just made the point, right? So people get in, they buy their Bitcoin rips, everyone's made a lot of money because money enters the system really through Bitcoin right now and through institutions, and everything is oscillating really around Bitcoin. Traders rotate their gains into alts to take on more risk, and it sort of works its way down, to your point, down all the way down to the low caps. And so, relatively speaking, they pump harder and harder and harder as you move down the system. Everyone's getting insanely rich. But when Bitcoin rips, because most people are trading the BTC charts, because a lot of people are in it obviously just to compound their risk-free stack, and their risk-free stack is a Bitcoin stack. That's the safety. They've got stop losses on the BTC charts. They're trading it against BTC, because if you're not outperforming BTC, there's no point. And so when those stop losses are hit, the money just rotates.
It will flow back
into Bitcoin.
It will flow back in. Seen it all before kind of thing. But it's interesting. I mean, there is clearly fresh fiat coming in, buying in all these dips on Bitcoin, and then once this altcoin liquidity comes back into BTC, it'll have its time again. So onto the news, PBitty. What's
news?
Oh my goodness.
Well, let's go big first. Yeah.
Hit me with
it. I don't know if people get how big a deal this is. I mean, like Nidig, I can't remember the gentleman's name. He was on a podcast like maybe a month or two ago, and he was sort of asked, is it bullish out there? Are you seeing a lot of institutional adoption? He said, I don't want to give anything away, but starting from now, you're going to see a steady drumbeat of institutional adoption and just some of the most bullish news you could ever imagine. This is massive, right? So Nidig, they have now created a partnership. The company they've partnered with is FIS, which is a technology and solutions company that supports the banks. They've got literally access to all the banks. So the banks outsource their software and their interface UX component to this FIS company. And so what Nidig have done is, by partnering with them, they're going to integrate the ability, to buy Bitcoin essentially on your banking platform, whoever you bank with. And they've got 300 million US customer accounts, across many different banks. And with a flick of a switch, these banks are going to be able to turn on the ability for customers to buy Bitcoin in their bank account, buy and sell. I mean, Mick, this is like, back in you must remember, like, in 2018 and 19, we were talking about how, mate, 2017's happened, the infrastructure wasn't there, it's being built, pipes are coming in, all these pipes are building a base for the bull run, right? We are seeing the pipes come in like never before. And again, we're building the base for the next phase of this bull run and this bull run move. The idea that the bull run is over is nonsense. When this price rips, and if all of this infrastructure is out there and built, and Bitcoin, you can see everywhere. You can see it on an ETF in your trading platform, or you can go into your bank account and see it. You open up your PayPal, sending it on Venmo and the social app, Cash App. You've got more and more treasuries coming. Like, you can't escape it. You're seeing it everywhere, and you can buy it at the click of a button. And the speed at which FOMO can actually happen, and to the degree that it could happen, and to the number, and to the ability for money to flow in. These pipes are still being built, but there's massive pieces of news around it.
This is huge. I mean, you can imagine this, right? You're the average punter, and you don't need to open up an account anywhere else. You can say, man, just imagine. So this will make it easier for employers to also pay their staff in Bitcoin. So it might be like, for example, what percentage of your salary do you want paid in Bitcoin? And it will just come in, sit in your account, and then you've got it there.
Auto stack. So your money comes in.
Auto stack. Auto stack. And look, I do it too. If I had a salary, it was coming in, and look, I hold my Bitcoin in my own wallets. But absolutely, if I'd auto stack, and you can just imagine, like, once this is in all of the banks, it's just going to be on autopilot. Everyone's got rid of it.
So listen to this, Mick. After rolling out the initial Bitcoin product, which is like the ability to buy and sell Bitcoin, obviously, in your account, Nidig plans to offer other services, including debit card rewards paid in Bitcoin, and a new type of bank account that is FDIC insured, but pays interest in Bitcoin. So there are supernormal returns, right, in crypto right now, in terms of interest and the ability to generate yield on Bitcoin. And you've seen the cash back. Everyone's releasing a credit card and a debit card right now, in terms of with 3% paid out in Bitcoin. I mean, how many cards need to be out there where people are basically auto stacking just on purchases which is just like more and more added pressure to number go up. And to be honest, it's kind of funny money for the average customer, where they don't need to sell it. They'll go, that's a speculation. 3% is coming in. I'm going to hold it in my interest account. And I didn't really buy that Bitcoin, so I'm just going to let it build because I think this Bitcoin thing is great. And that just puts more and more pressure. You know, that's what Fold app is doing. You know, Gemini coming up with a credit card. You know, BlockFi keeps saying this is going to come out in Q1, but these cards, and to be honest, earning interest, supernormal interest, right, that is likely bigger than any other savings account. People might go, oh, I might go for 5% or 6% in Bitcoin over my 0.25% in cash, given cash is trash anyway. I mean, this is just this, like, Niantic are really taking the reins here to just send this thing. They've done such a good job. Everyone should go and listen to Ross Stevens' interview with Michael Saylor. It's so bullish.
This is one of the biggest pieces of news that has come out this year.
I know, and this, Mick, like, the price didn't pump. It's quite interesting, right? Like, that's probably one of the naysayers would say when this type of news is coming.
It's a heavy market,
It's a heavy market, but I still think that the price outran just the pace at which news could even have an impact right now. And
I think you're right. Yeah. And it needs time to reset and needs time for the market to build more momentum. And the attention is on shitcoins like Dogecoin pumping and altcoins. Everyone's getting into Ethereum or whatever it's called. It's like Urethra.
Okay.
That's what the average punter is doing. They're rotating out of Bitcoin into that, and Bitcoin
and that's
still up.
And what you must pay attention to more than anything is the remarkable amount of money in the altcoin market. I mean, if Dogecoin is currently worth $80 billion and it's ostensibly, I don't want to say it's a greater full Ponzi, but there's not a lot going on other than pure speculation. You know, what happens when that thing dumps, 50%? First of all, there's impermanent loss. It's not like you get 40 billion out because you just can't, there's not enough exit liquidity. But a huge amount of money is coming out of these ridiculous projects, and they will want to find a home with greater fundamentals. And obviously that rotates heavily into Bitcoin. So
60 billion is not going to come from Doge into Bitcoin. It'll be but
billions will. And so that's fascinating. I mean, that's coming. What have we got next?
All right, DBS. So Southeast Asia's largest bank, DBS, says trading volumes on its cryptocurrency exchange have increased 10 times. Now, they've only got 120 customers. Clearly, it's just for their kind of high net worth institutional clients. But again, just shows that more on-ramps, more adoption through traditional banks in areas outside of America, Canada, Australia, that kind of thing. So yeah, this is just going to keep growing and escape velocity. What do you think, PBitty?
Yeah, Mick, I think that the size and scale of some of these things are irrelevant. I think we all know that once you start dabbling in Bitcoin, you don't turn back. And so that's why it's bullish, right? So it doesn't really matter about the size. It's just
small volumes,
once it's integrated, though, they're going to go, wait a minute, this thing is generating money? It's like PayPal was surprised by how much, we're like way ahead of what we thought the projections would be on this thing. And so you just want this happening because you want the conversations to be happening at the highest levels, and you want people to be able to size and scope the opportunity appropriately, because when they do, they'll expand their services and they'll realize this is where we need to invest our time. And so absolutely bullish.
They've got 120 customers. They're going to be bringing on more, so pretty bullish. All right, Digital Currency Group.
Yeah, so this was so I think this is this is a multifaceted piece, right? So Grayscale, they're trading, their premium has collapsed. And I think it's collapsed for a number of reasons. I don't think anyone has a very clear view on it, but essentially there was a huge demand to buy the Grayscale trust and sort of arb the premium on Bitcoin, and because it would trade at such a premium. And I think what happens there is everybody who can get into the game gets into it, and then when it sort of crashes as Bitcoin pulled back and it sort of goes negative, a lot of them either walk away, or because they can no longer arb their way back into profit, they don't come back in, and there are no new players. And so that's part of it. Then the other part is that Grayscale is expensive, and It's expensive. It's expensive for fees. It's not ideal. They lock your Bitcoin up for 6 months. This is the sort of thing where it was really popular in late 2020, and these guys just grew massively. Like, it was insane. You might remember it was just the amount of the billions of dollars coming into Grayscale was absurd. They would be one of the biggest ETFs in the world if they convert to an ETF. But what the bullish thing about the premium collapsing is, I think it was a sign that the market matured and people now understand better ways to both onboard and access Bitcoin. So I actually think you can look at it that way, that people are, it's a non-competitive, in a span of 6 months, it became non-competitive. And I think that's hyper bullish. This is Digital Currency Group, though, buying $750 million worth of Bitcoin through the GBTC Trust, because Grayscale probably want to bring big money in to try and get that premium back to zero. But B, Digital Currency Group is speculating on Bitcoin as a great product, and they're going to make additional money as the premium bounces back, or when Grayscale converts to an ETF. So this is the $750 million buy. They've upped it from $250 million. So again, it's just more adoption and more interest in Bitcoin, and someone tripling down on their original.
So you're saying this is Grayscale by the dip, by the premium dip?
Yeah, well, this is Digital Currency buying the dip. Really.
As in by the dip of Grayscale premium, yeah.
Yes, exactly.
Interesting. All right. Next up, eBay.
Was there another one? I missed
Denmark was before this.
Oh, yeah. Did I not pull that up? Hang on. Go eBay. I'll go eBay while I.
Yeah, sure.
So eBay, they are thinking about getting into the Bitcoin as a payments rail space, and I think you and I are not super bullish on that.
My Bitcoin app for sale.
Yeah, exactly. Like, who the hell is going to sell their Bitcoin and use it for purchases and
if I become a buyer, if I'm a buyer on eBay of products, I'm a seller now. I have to sell my Bitcoin to buy that product. So
yeah, I'm not shorting Bitcoin and longing, address. So yeah, the reason why I put it in though is that clearly companies are compelled to be involved.
Yeah.
And that's bullish. They're talking about it at the board level, which we suspect is happening in companies all around.
Keep your secondhand fridge. All right.
The story's not coming up. Give me a sec. I'll try and get it. But maybe you just start speaking to it, Mick.
Yeah, basically negative interest rates on deposits over $16,000 on Danish banks. So I put my money into a Danish bank, whatever their fiat currency is called. They're going to take money from me.
The krona.
They're not going to pay me interest. They're going to take out of my bank account. So not only is the currency getting diluted from printing, but they're also going to take it out of the bank account. And this just goes hand in hand with the narrative of Bitcoin as an inflation, where are you going to put your money?
Great. Yeah, I've heard Plan B talk about this. Plan B, the anonymous author of the stock to flow model, and I think he's Dutch. He's a Dutch quant, and he's talked about Europe and the negative interest rates there. The banks in Europe are pretty fucked, to be honest. And they're trying to roll out negative interest rates in a lot of areas, and they don't work. What? You've got to compel the banks to lend at negative interest rates. You've got to compel a customer, from a savings perspective, you've got to compel a customer to hold a negative, a negative deposit. And we just spoke about a story where people potentially, at a click of a button, are going to be able to convert to Bitcoin. So, I think it only accelerates the use of digital wallets. It only accelerates the use of cryptocurrencies. The ability right now to have access to like a US dollar stable coin and send it into a custodial solution to get 8 to 10% interest. Why would you, sitting in Denmark with your krona, your shitty krona, go to try to save money in the bank? Why wouldn't you convert it to US dollars if you're not comfortable with Bitcoin, and put it into one of these digital wallets and earn a real yield? And then potentially be exposed to Bitcoin as well, right? So these are just the narratives that are slowly going to build up, and it's working in our favor across the world.
Absolutely.
What's next, Mick? Because I did my story, I think we're flipping to China's
central bank. So they're working with Ant technology. CBDCs are getting rolled out now. So Ant are part of Alibaba Group. Yeah, look, there's not that much to talk about in terms of this. It's just good to keep kind of track of it lightly, just because CBDCs are coming. Interested to see how they'll roll out. China obviously extremely bullish on them. We kind of touched on this in the last episode. We discussed some of the issues that can happen with CBDCs and having the government be able to have full control of your money. So they actually control the software that your money is on, and very easy to do things like have money expire, negative interest rates, force you to spend it, censor where you can spend it, things like this. This is why China is very bullish on it. And yeah, you can see this rolling out, being adopted, and it's probably coming to most countries. Have you got anything else to add on that, PBitty?
Yeah, I mean, I was on the PayPal earnings call, and the CEO, Dan Schilling, was speaking about the fact that they're speaking to all the central banks about CBDCs, and it's quite obvious that they're coming from every which direction. Part of it is the fact that it's essentially, not only does it disintermediate the banks, it allows the central banks to sort of affect monetary policy with a surgical level of precision. So this is like big data and behavioral economics coming to money and programmable money. This is also the ability to do it at the speed of light, as opposed to running through multiple people's servers and relying on the banking system and servers to essentially, multiple servers, literally millions of servers around the world, operating with counterparty risk between each other, and no one can see the full picture. With CBDCs, it's like it exists on one ledger. That's probably the key component where it is actually, cryptocurrency. It's probably not going to be public in terms of the ability to either look at the ledger. Maybe it is, but and it certainly won't be decentralized, and it certainly will not. It'll certainly have monetary policy built in where China can pull the strings and do what they want. So that's what I mean by programmable money. So it's not really a cryptocurrency, but they are utilizing the ability to have instant settlement all around the globe, which allows them to disintermediate the banks, which, they're operating. The banks are going to have to adapt or die to this new world. And that means everyone needs to have a digital wallet. And China, on top of all of that, will utilize this technology to control and surveil their people. So this is happening. This is why it's not a threat to Bitcoin, because everything I just said is not how Bitcoin works. Yes, you can surveil the ledger of Bitcoin. So China are actually probably partly bullish on Bitcoin because they can still have control and surveillance mechanism built in. But the one thing about Bitcoin that's different here is it's not going to be inflated, it's uncensorable, and it's unconfiscatable, and it's truly decentralized. So people often think, is that CBDCs a threat to Bitcoin? And it's like, no, it's the opposite of Bitcoin. This technology was invented as a uncensorable, decentralized, network. That's not what these digital currencies are.
Strengthens the narrative of, strengthens the use case of Bitcoin.
To be honest, it probably onboards people faster, because if everyone's moving to digital wallets, you can probably buy Bitcoin at a click of a button. As people get used to this type of technology, it's truly going to change things.
Yeah. All right. What is up next? New York City, New York State?
I mean, it's more energy mining FUD. It's just New York potentially putting in place a bill that will halt mining in their state for 3 years while they assess the environmental impact. I mean, 3 years, you want to miss the whole game.
Yeah, big time.
Yeah. So I mean, this is like, we were talking about this last week, where I think this will be state adopted and state driven. New York are choosing to fall behind in mining. Meanwhile, the Miami mayor is literally calling them out that this is like a terrible policy and we're going to welcome Bitcoin mining. We've got the mayor of Texas talking about the fact that He's like, we are going to lead Bitcoin mining. They've got laser eyes. I mean, the orange pilling of different, politicians and mayors is just unprecedented. You wouldn't have believed it sort of, I don't know, 2 years ago. But the reality is here, there's going to be regulatory arbitrage, which will only drive mining to certain regions and sectors, and those people will profit and others will fall behind. And to be honest, this will not last. I guarantee you this will be overturned very quickly when they realize they want to have a mining strategy in New York.
Do you think that that's smart?
I think we've seen a lot of people run away with the tail between the legs and say I was wrong.
Yeah,
and I think it's possible. I think it's possible.
And does it matter?
Definitely possible.
Does it matter? Bitcoin will just
keep
doing what it's doing.
Profits drive incentives, and if they realize they're losing money, that's the reason. It's money talks, and that's what, when they realize they're out of the game, that's why I think it's possible that they just scrap it eventually.
Yeah.
There was some interesting politics behind this. I think there was a coal, I think an oil or some kind of energy company that converted over to natural gas, and it funded it through Bitcoin mining. And so there's some talk around there being some politics involved in this decision that happened in New York to address the quote unquote concern and problem. So I don't know.
There'd be more to it. Surely there's more to it.
There's more to it.
All right. Chamath is no longer speaking.
Say his last name, Mick. Say his last name.
Palihapitiya. Yes.
You did it.
He's no longer speaking at Bitcoin 2021 conference because he supports other coins, which is a big no-no apparently. If you're going to speak at a Bitcoin conference, you can't support, well, I won't be speaking. I won't be speaking at any Bitcoin conferences because I do hold positions in other coins. But this is funny. He's like one of the biggest personalities in, one of the biggest media personalities in cryptocurrency and in Bitcoin. And do you know how this actually unfolded, or was there something that happened before this?
He was a guy who I think went on a podcast or even spoke in public. He was Bitcoin only and had no idea what DeFi was. At one point, him and I think his partners controlled 1% of the Bitcoin supply. They did sell it down, but they had a lot of Bitcoin. He still has a lot of Bitcoin, and he called it schmuck insurance. I don't think he got the full value prop. I think he saw it just as a hedge against the monetary system blowing up, as opposed to it actually having, I think, incremental ways of growing in value, like taking out gold and being utilized for remittances and having other values at a value set beyond an insurance policy. He was Bitcoin only, and he was getting peppered with questions around DeFi, and he thought he doesn't have a clue what that is. And then he found out what DeFi is. He's like, I'm all about DeFi, and
loves it.
Into NFT. He loves NFTs. He got into NFTs. I'm all about NFTs. And then one of the Bitcoin plebs, I think his name's Surfer Jim, called him out on Twitter, and they went at it, went after each other. And he was pretty arrogant. He came off maybe a little bit crass, like, I'm a billionaire,
is that when he said I think they've got it up there on the tweet. Is that when he said you're a joke,
Yes, there it is.
Still live in mum's place. Yeah, I mean, that's a bit crass.
But here's the thing. I'm uncomfortable a little bit with the kind of toxic maximalist going after everybody and sort of, look, I get that people Bitcoin is the crack cocaine of investments, right? It's a combination of number go up and you make a ton of money, but you also have the moral high ground and you're changing the world, quote unquote, right? And so that combination makes people, ardent defenders of Bitcoin and the network for obvious reasons, and kind of disgusted by altcoins and the fact that they're just trying to do business-orientated things, right? Corporate things. And you should not engage in engaging in altcoins should not be seen as any worse as engaging in speculative equities or Series A kind of opportunities that haven't gone to market yet. Now I get the scams out there. I get most of them are nonsense, but the Bitcoin maxis, I think it's a net loss, right, to the conference. Like, why wouldn't you want Chamath to sort of be at the conference and be talking about Bitcoin? Do we not lose out another voice for little to no reason? And the maxis will say it'll grow naturally, and I concur. Like, I think there's truth to that. That it'll grow naturally, and maybe we don't want Bitcoin to grow too fast because it doesn't allow for adoption to happen.
No, I think it's just straight toxicity. It's a negative part of the community, and I don't like it.
Agreed. And the other thing I'd say about it too is I think sometimes it comes off as fear, and fear comes off as like uncertainty, right? So sometimes they make sweeping attacks and statements on people, and I'm like, that's a little bit. Are you scared that Bitcoin isn't going to win? Like, do you actually believe it? Like, why do you have to be so aggressive about it? And that's why I actually think it comes off as a form of it might come off as a lack of confidence as well, right? So I don't see any benefit to it, but interesting fact. Interesting that it happened.
Interesting. Yep. All right, moving on. We have. I think before that, we're just going to quickly mention. Before that, I think we're just going to quickly mention Mercado Libre. So it is. Oh no, sorry. We're going to. Let's quickly mention the Mercado.
Yeah, let's do Mercado.
Yeah, Taproot's a bigger topic. Yeah, they purchased $7.8 million worth of Bitcoin, so they put it on their balance sheet. They are kind of the Amazon of South America, so another large institution getting into Bitcoin, putting it on their balance sheet. Again, e-commerce company, so possibly they may be offering it as well for transactions and purchases for their customers. So we'll see. But just another South American company kind of getting into Bitcoin. So that
Micky, guess who bought I think a $400 million position in Mercado Libre about 2 years ago? 2 years ago.
Who did that?
PayPal.
Interesting. All right.
So these guys are dominating South America. South America is obviously a region of the world with tons of inflationary issues and pressures. Look at Argentina. Venezuela obviously is falling apart. I think it's a big deal that these guys are tinkering. It goes back to what we said before as well. Like it doesn't have to be a big position. The fact is, this is a big company with strategic investments by strategic players and going all the way up to the board. There's discussions around Bitcoin, and those conversations are getting through.
Absolutely.
People are purchasing Bitcoin. So I think it's a big deal. It's these things that go under the surface that people don't realize are actually bubbling up to the surface and are instigating adoption. I
was just going to say that no one would pay attention to this news outside of the very small Bitcoin community on Twitter and stuff. Like this would just be, it's a nothing piece in terms of the average punter, but it's all kind of happening below the surface.
Honestly, me too. The average punter wouldn't even know what NID is and what they're doing and how massive that is. No. Like that, the information asymmetry in this space and how much we know and how little the average person knows what's going on around them. And it hasn't even started yet, right? Like
Absolutely.
This is going to explode. We're one meme away from this exploding into the mainstream, and all the infrastructure is set, and the knowledge base.
We're seeing the full financialization of Bitcoin. It's going to be integrated in every financial application.
Very soon.
Crazy.
Very soon.
And it's happening so quickly. It's happening so quickly.
And Mick, that's why I'm kind of leaning into a lengthening cycle, because
I'm not, but also I love your energy. I love your energy.
Feel it.
Taproot. Hang on, let me just pause this for 1 second. Okay, sorry about that. We had some technical issues, but we're back. Tell me about Bitcoin Taproot, PBitty.
Yeah, so this is the first major update in 4 years. It's a soft fork. Takes 3 months to gain community alignment. So the miners signal in the blocks, and we need about a 90% pledge, and we're at 65%, which is huge. But this is like a relatively non-controversial update. Everyone, I think, wants it. There's nothing here that would suggest you wouldn't. It also enables Schnorr signatures. And so the combination of Taproot and Schnorr signatures, it's all about basically the ability, it's a scaling and privacy solution for multi-sig. And multi-sig is, multi-variable outcomes as well, right? So it's kind of got smart contracts built into it, but it takes and multi-sig just setups as well, right, for Bitcoin. But it takes all that pressure off the base chain because it appears as one single transaction. So you can essentially run like a smart contract with, you know, multivariable outcomes, or a multi-sig transaction without it being and it's private because you can't tell that those you know, that there's multivariable inputs that are happening on that transaction, and it's compressed into one. So it's actually a scaling solution. It alleviates pressure on the base chain, allows us to scale better, fast transactions. It actually has an enablement of smart contracts. It is actually more, it's a better security system because Schnorr signatures is actually an upgrade. It's actually, Schnorr signatures were actually patented by the guy that invented them, and Bitcoin couldn't implement them because the guy wouldn't allow it to be used. But that patent has run out, and so it's coming in as well. So highly, Schnorr and Taproot are, like, for a developer, like, very exciting. This is like a big deal, and it is like the biggest update in 4 years, and it really does bring a lot of functionality, scalability, security to Bitcoin. So it should not be overlooked, but of course, you know, most people will not even realize that it's happening.
No, and because Bitcoin development moves really slowly and is very conservative.
Absolutely.
Number one concern is security.
Absolutely. And lack of change. Like, we do not change the base layer unless everybody is on board.
Yeah.
And we are close to ossification, right? Like, we're almost at a point where there will not be much further development on the base layer. You know, Taproot and Schnorr, amongst other things, were probably the biggest pieces that were in the pipeline to actually just get done. And here we are. It's probably be implemented potentially by the end of the year. It's taken like a long time. It's taken years.
Yeah, that's huge. Awesome.
Yeah. So Russell Okung, the tweet here is just around Grayscale. You know, now partnering and sponsoring the New York Giants, and not only that, like the number one draft pick. I listened to a podcast with Peter McCormack. He's been orange pilled, and apparently Bitcoin is going a little bit rampant amongst you know, sports stars, and people are talking to each other. We also had a famous surfer. I can't remember her name. I'll have to bring her up next week. Bethany Hamilton. She's got 1.3 million followers. She's completely orange pilled. She even wrote a blog post about how, you know, she thinks Bitcoin is the future and why it's going to change the world. You got FTX, the trading platform, sponsoring the Miami Heat Stadium, which of course relates to the Miami Heat mayor, Francis Suarez. So, you know, there's a ton going on. You know, Jack Mallers says that, you know, Strike, he's been inundated by other NFL players to take their bonuses in Bitcoin, and he's using Strike as a platform to do that. And, you know, this is just part of this mainstream adoption and more. You know, you and I said this market, if it goes big, we will see a cultural shift, and people who are celebrities getting involved and taking it really seriously, right? So that's where we're at. We're at that point.
But as soon as Kate Perry comes on her Instagram with crypto fingernails, you sell everything.
Absolutely.
That was the top of the 2017 cycle.
That's right. So the only other story I had was Cash App, which we just added a little late. It came out today. They had their earnings today, and again, I think we spoke about this. We knew even these little tiny numbers down here. We were looking at these going, it's going parabolic.
We couldn't believe how fast they were growing.
Yeah,
that was last year. Yeah,
that was and it's continued to do what we thought it would do. I mean, you know, just everything continues to line up. You know, that you may not see it in the price action yet, but you're seeing adoption and you're seeing money change hands. And if you think about how speculative the alt market is, that's because a lot of this market, you know, pertains to speculation. But what you're actually seeing in Bitcoin right now is a compression of the speculators being pulled out of the market, and, you know, underlying adoption and network growth happening. And when that explodes out of that, you know, out of that compression band, we go up. I think we go up hard. Topics, mate. Should we talk topics?
Yeah. What do you want to chat about?
I'm going to stop sharing my screen so we can look at each other.
Lovely.
We should hide my PBitty. Is that on the screen?
No.
Okay, cool.
Just your wonderful face.
Just my wonderful face, because I'm plugged into my phone and the computer at the same time. Look, did you watch Raoul Pal's Exponential, the Exponential Age, or the Age of Exponential, whatever he called it?
I did. Yeah, it was pretty good. What did you think of it? What were the key takeaways?
Obviously, he's into crypto and he's all in. He's not just Bitcoin anymore. He's moving out on the risk curve, as he calls it. I'm just going to close my door. Hang on one sec. He's talking about what I think about what Raoul Pal's saying ostensibly, and this is quite broad, but macro is dead. It's been completely washed out by kind of federal central bank actions and on a monetary policy, and it's kind of become it's coming to an end game. And I think he saw what should have been a huge insolvency phase happen. It didn't happen, and I think he underestimated their ability, obviously, to curtail what should have been the insolvency phase. It doesn't mean it's not here, but his point is there are no macro plays left, and when everyone's debasing their money, it's very hard to try and what trend are you going to pick up on. The only thing left is actually crypto for him, and one of the other insights that I think I've heard from a lot of investors is, everyone's tried to do well and done well over the last 10 years investing, but value investing and the sort of Warren Buffett way of investing is dead. And to be honest, if you just invested against Metcalfe's law, and Metcalfe's law is networks, and when networks grow, they become more dominant, and their value that they accrue is not just incremental; it compounds and it's exponential. And I guess this is actually Michael Saylor's playbook, right? He wrote the mobile wave in 2010, saying, "Here are the dominant networks. Here's where you should put your money. Go have fun, you'll make a fortune." And Raoul Pal looks back on his last 10, 15 years, and I think he says, I should have just invested in dominant networks. But now he sees one, and what he sees is crypto and Bitcoin as these dominant networks that are going to disrupt all of finance, and at very least the money. I don't think he obviously he's a little bit soft on Bitcoin in some ways, but he does see it as the underlying collateral to the new system and the pristine collateral. But what really kind of got me thinking about my own thoughts was, this is all happening faster and faster, and crypto is weird. Like it's the Wild West, and it feels like the Wild West. And it's super exciting, and it's minting millionaires every day, and there's just so much money to be made. And Binance was the world's fastest unicorn, growing from 0 to 18 months. It's a multi-billion-dollar company, and with thousands of people. And FTX goes from idea to sponsoring the Miami Heat stadium within 18 months. Like,
that's so fast.
The wealth creation is just absurd. And he's a billionaire now, the owner too, right? Like he's a billionaire in that short amount of time.
Launching the bear market too, right?
Yeah. And what actually got me, and Bitcoin is the fastest asset to reach $1 trillion, right? Like fast and faster than like Apple and those companies that came before it, because the exponentials are getting faster, and this is sort of Jeff Booth's point around not only is technology deflationary, but it's exponentially so. And and as technology sort of moves forward in this exponential manner, the change and the dislocation only gets bigger. And also, I'm going, well, what the hell is next, right? Like if crypto is like mints millionaires and billionaires within 12 to 18 months, or let's call it, be even more conservative, let's call it 4 years. Imagine when these are exponentials on exponentials. Imagine when we've got technologies that are minting, billionaires that are so disruptive that it mints them in 6 months. Like imagine that there'll be projects potentially built on top of crypto that happen so fast and with so much disregard to the rest of the system that the speed and the ability to actualize profit will happen so quickly. And part of the reason is, crypto only exists because of the internet. The internet took 20 years to roll out because you had to roll out the infrastructure. People had to buy computers and modems and new network, new wires that sort of connect us all, and all of that takes a ton of time. But when you roll out cryptocurrency on top of that, it's just almost a software solution for the average user, and it's bang, it's in your hands, right? So it's actually, this technology is built on top of technology. These technologies are exponential, and I'm looking at this world going, this is only going to get crazier. And I think he's saying we're moving into the age of exponential, and I'm sort of like, I think he could be right.
It absolutely is, and I think the interesting thing, thinking of like exponentials and which platforms will last and things like that, is you've got Bitcoin, but then it'll be really interesting in the upcoming bear market next year, if we do have one, which DeFi platforms actually kind of grow, because there is use case for DeFi platforms in a bear market too, because you can put stable coins on them and things like that when people want to get out of their Bitcoin or Ethereum holdings. So it would be really interesting to see, because a lot of this stuff gets built out during the bear market. Like, we were looking at the infrastructure that was getting built out over the last couple of years, and it was all there for mass adoption. The market just had to catch up to it, which again coincides with the 4-year cycles that Bitcoin goes through. So it's going to be fascinating to think what's going to happen over the next couple of years, in terms of which platforms will really grow and come into their own. And I think the key is, sustainable use cases as well.
Yeah, DeFi is tricky and messy, and it's exciting, but it's also filled with issues. Something good hopefully emerges from it, and they've got to work out. They've got to work out a lot of things around. There's obviously regulatory risk. There's obviously the fact that they're sort of corporations, and in the sense that they're not necessarily decentralized. So the ability to decentralize. And then there's the UX build, which I think you're talking about, which would obviously make it more functional. It can't just be for speculation. The governance in the tokens and the protocols needs to mature. They can't be established in a sort of a pump and dump style. I'm not saying they are, but they need to have
it's in the heat of a bull market, so that's kind of like what they're being made in.
Yeah, and so the foundations are shaky on ETH and proof of stake. I don't think that inherently has created anything new, if you consider the fact that proof of stake coalesces and centralizes to those who hold the most coins, and therefore so does the governance of the system. Can it actually scale probably on second layers like Polygon or whatever, regardless of whether it gets to ETH2. I mean, if Bitcoin can scale on layers, so can ETH. I've talked to you about the token economics of ETH and how it doesn't really make sense to me, at least until someone
It's experimental. And I think the fact that they have a dynamic monetary policy is because it's a new technology and it's kind of finding its path. Like, you can't say that, well, Bitcoin is too volatile as a store of value because it's in its first 10 years. So is Ethereum, but it's kind of finding its path in terms of the technology and monetary policy that it has, and trying to solve kind of scalability, security, and cost as well.
Yeah, I mean, I agree with you, and that's if it can even happen, right? But
it's a big if.
It's a big if, and the one thing I think, going back to toxic, maximalists, I don't like when maximalists kind of use some of the arguments against ETH that they don't like being used against Bitcoin. Like, governments will ban it. Well, it's like, that's not really the point. That a maximalist would say about Bitcoin, that proves that the asset is worthwhile. It's doing something useful, and so if governments are banning ETH, it's because the asset is worth something and doing something useful. And so that's just one example. But yeah, look, I think it's interesting. Look, we will stay fascinated. There are massive pitfalls in the way it's all currently constructed. I have nothing against them trying to figure it out. We know that it's speculative and people will lose their money, but I'm also not going to be concern trolling. Like, a lot of Bitcoin maxis concern troll, you'll lose all your money, and
stay with Bitcoin.
Don't trade these things because you'll lose all your money. Well, no, there's a lot of people making a lot of money. So let's not pretend that we care so much that people are gambling. You're allowed to gamble. You're not standing outside of Vegas saying, don't gamble, you'll lose your money. Like, people are allowed to do what they want. It's not any concern to Bitcoin. But yeah, I feel I'm torn. I mean, I sit in the middle, right? I'm very interested to see if they can pull something out of it that's functional. And I think I think if we're talking strategically, which we have, the next bear market, we will see what rises from the ashes, and there'll be huge opportunities. I think, if something does, right, if it works out. So
massive opportunities, yeah. And I guess like it's probably a chat for another time, but just going back to like first principles of why open finance, why decentralized finance, and is it actually solving a critical problem in the world? And I could almost see it as some kind of a hybrid model, and perhaps the exchanges become these kind of interfaces. Oh, you got the kombucha. What flavor are we rocking there, PBitty?
Different one today. Oh no, it's the same. Well, it's a different brand.
Ginger and
just ginger beer.
Very yuppie of you. So you have these, maybe the exchanges become like quasi banks where you can deposit your crypto, get access to the DeFi kind of platforms, the DeFi protocols. But you as a user don't have to worry about the UX or holding your keys in MetaMask or anything like that. But if you want to do that, you can also use things like MetaMask and hold your own keys.
I mean, Mick, I'd go one step further and say, yes. I mean, with a proof of stake system, it will undoubtedly centralize to these exchanges where people will earn a yield. In Binance, for instance, would clip the ticket on that yield, but it's just so easy to use that you store your shitcoin there and earn that yield. The reality of that, though, is that's the centralizing factor that I'm talking about, because then they become the banks of the new world. They control the consortium of these companies end up becoming the JP Morgans and the Goldman Sachs. And because they control the most ETH, they're essentially the network that controls the protocol, which undermines ultimately at least the monetary value of the token.
Doesn't it undermine the decentralized aspect of it?
Yes, which undermines the monetary policy, which undermines the fact that it's quote unquote ultrasound money, right? So if we ignore the fact that they're trying to pitch this ultrasound money thing for ETH, which I think is it's a bit weird. I think what it really should be is a piece of equity, because you get governance built in and you're accruing value, because what is accumulating to it is kind of the bank fees of utilizing the system, because it's flowing through the system to utilize the utility of the system, and it's accruing value on that basis. But it's centralized. It's kind of like almost a new version of a corporation where it's semi-decentralized, because it could have a consortium of big players, but it's the same kind of. It ends up being the same sort of power structure, I think, that sits over the top of a purely centralized authority. And the question then becomes, can it outcompete a purely centralized authority? Because if you negate the benefits of decentralization, what's left? If you're sort of like beholden to, if you were beholden, Mick, to JP Morgan, Goldman Sachs, and Morgan Stanley, even though there's three players, you'd still feel like, well, I'm working for the man. My money is still my value is at the behest of these big players. So it's still got the Cantillon effect built in. It's still sort of the rich get richer, the central, the 1% control the money, and those who control the money control the world, because they control the monetary policy of the world. So I mean, that's a very high level philosophical view of it, and I'm open to discussing it and trying to get deeper on it.
You got to see whether Ethereum can actually scale, and whether it's going to be functionally usable for the average punter in a couple of years. And look, if you go back to, again, like first principles, kind of looking at these DeFi platforms, why are people going to be using them? Financial incentive, simplicity, and ease as well. So we've got to almost think of the short-term use cases that will potentially make them sustainable in the future. And
yeah, it's a good point.
Outside of a bull market where everyone's in there just to pump up their own coins. So I'm talking about using them properly for borrowing and lending, earning yields on your stable coins, on your BTC allocation, on your Ethereum allocation, while it's in a bear market, while everything isn't pumping, sort of thing.
Yeah, so
it's going to come down to ease, simplicity, financial incentives. You get more yields, and it just makes sense.
Yeah, you make a good point. And what you're actually saying there, that's sort of hidden in what you're saying, is no one really cares about decentralization, right? So
I don't think they do.
They don't. And so, but here's the thing. The only reason, the biggest use case for decentralization that actually makes sense is money, right? So
Okay.
you want the base layer money, and ETH is not money. So no one cares about decentralization playing all the games in DeFi and speculating and stuff, because they price it all in US dollars anyway, and they get it out. But ultimately, if Bitcoin is to become this kind of pristine collateral of the new system, it sort of takes out gold, but obviously it takes out bonds, and it doesn't matter in the end if a layer sits on top of it for the transaction layer, because transactions for buying coffee is such a small amount of the system. You're talking like you've got 500 trillion in global debt and bonds, which is the real money, and then sitting on top of that is maybe a few trillion being used to buy and sell and purchase goods, right? So it's the last thing that matters. 90%, 95% of the system is actually the collateral of the system, and that's where Bitcoin, I think, steps in and becomes potentially the pricing mechanism for the world, right? Then we can park that. But my point being is, yeah, Ethereum can do all this cool, fancy stuff, sit on top of it, and the ETH token will be priced in, always be priced in money. It will not be the pricing mechanism of all money.
But that doesn't mean that it won't accrue value and won't have a future.
Agreed.
Okay, it's not money, but it can still accrue value, and people can still use it as a quasi kind of store of value, but just owning a piece of that network.
Yes. And I think it exists in a world with other, call it centralized networks, or these partially decentralized kind of these blockchain networks. If they can retain any efficiency of a centralized, just pure centralized corporations, we'll have these, quasi decentralized, not really, but sort of call it a consortium, blockchains that are sort of partially controlled by a random group of people. And yes, they will have token economics built into it, where people participate in the ecosystem, and by participating, they own a part of it. And the key is that these tokens and these systems will still be priced in some other asset called money. And I think Bitcoin has a huge chance of being that. And so all I'm pointing out is, I think when the people, these ETH maximalists who say ETH is ultrasound money, no, I think I'm close. I'm leaning towards this. No, it's a piece of collateral in an ecosystem shared, which is priced in some other form of money. And Bitcoin has the potential to be money by being 100% decentralized, 100% the most secure, and retain all the discrete properties of money, transferable, fungible, unforgeable costliness, a number of these things that money needs to have. And therefore, what I think sometimes the ETH maximalists underestimate is, I think they think the total addressable market for Bitcoin is like 10 trillion, but it's like way more than that. It's like hundreds of trillions. It could be 100 trillion at least, and it could be a lot more, depending on how many different types of collateral we move towards. We could have commodities basketed in some kind of token, which could be part of the underlying collateral of the system alongside Bitcoin. But anyway, Bitcoin's total addressable market is massive. It's got 100x from here. And I think they minimize that because they think their network is going to not only take over the world and just be this one ecosystem, but also money outside of the network. And I just don't agree with that hypothesis. And I've talked other reasons why.
Yeah, you're more. Yeah, and I think like you're more talking about the ultrasound money thesis, which they go on about in terms of you can use Ethereum as collateral, you can use it as a store of value, and it also has the utility of powering the decentralized the ecosystem of applications on top of Ethereum, which even if it doesn't have the hard-coded monetary principles of Bitcoin, it can still accrue value and go up quite a lot and be used. So we could live in a world where with both, but again, it just depends on how it looks in a couple of years and whether proof of stake is scalable.
I think they think they have a network, like a network moat, that their network has, it's a dominant network and therefore it accrues all the value, like Metcalfe's law. But I don't think that's true. I think that, and the reason being, to your point earlier, was that it's actually about financial incentives, and people will move their money where they can make the most money. And so I think you're right. I think in the short term, ETH is a good trade. It's definitely a good trade. I think if you're just trading, play the game. They're the dominant network right now. But ultimately, I think it's not a world where it's a one player wins. It's not money, so it doesn't even have the optionality of being that. And that the ETH token, the margins will be compressed because they'll need to be, because as the as the value of the token goes up, the network becomes more costly to use, and then Binance Smart Chain comes in, or other players, right? And so they end up living in a world of competition, of competitive networks. And I don't know, I've never thought about this, but I don't think if a blockchain is decentralized, a blockchain cannot acquire another blockchain, right? So like Facebook became a dominant network because it ate all the players as well. So when Instagram blew up or WhatsApp blew up, it could just buy them. And so of course Metcalfe's law applies. Of course it's a dominant network right now, and that gives it a lot of runway. But I do think that the value proposition, depending on where other networks go, will suitably differentiate that they become big players, right? And then because of financial incentives, Mick is not going to pay $4,000 to get a 7% yield over here when he can pay $1,000 and get a 7% yield over here, and you'll be moving swiftly between these blockchains. And this is if it all works.
Yeah, you're saying there's no real stickiness to any of these platforms, kind of thing. And centralized platforms can be cheaper, faster to run, and it does all come down to short-term incentives for the user.
Yeah,
it's not a philosophical decision of decentralization to use a DeFi platform. It is financially incentive.
And you were mentioning UX. The UX will be so good that you'll just switch to the cheapest platform. And so in the long run, the margin and the pressures of price on the ETH token they're all headwinds driving the cost down until you reach an equilibrium. And that equilibrium could be down or near zero if centralized platforms are acceptable and can compete, because eventually all margins are eroded to better technology. You eventually, there's always going to be a point in time where ETH is challenged, right? And just like any organization or corporation, and when that comes, and better platforms come along with better UX, and it's cheaper and easier to use, it just goes one direction, and that could head to zero, right? Maybe the long-term appropriate price of the token is zero, because you should pay no fees in a future where there's abundance and technology reigns supreme.
Yeah, we'll see. We'll see.
Money's different, right? Money needs to accrue value. If everything's going to be priced in money, it actually has to go up. It's the one thing where it's the complete antithesis to margin pressures. It's meant to go up in value, become more costly.
BTC is a savings technology. It's a store of value. It's not a smart contract platform that's kind of experimenting and finding its path and things like that.
It's not trying to find utility within the ecosystem itself, if you know what I mean. Do you know what I mean? Like ETH is like oil. I mean, people hate it when I say, people hate analogies because it almost gives ETH properties that either doesn't have and doesn't make sense. But as an analogy, you do not, ETH as oil means it needs to be used to fund or to sort of drive the ecosystem, almost like the energy input. And you don't want that going up and up and up and up and up. You actually want it going down and down and down and down if possible. And because it's not oil and it doesn't have any kind of forgeable costliness, it can go down, 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 and other chains will copy you, rip it off, and make it cheaper. And that's exactly why we've seen fluctuations between ETH and Binance Smart Chain. When fees get too high, Binance Smart Chain rips, and scams are built on it because it's the cheapest chain to get retail in, that kind of thing. Retail are priced out of ETH right now.
They are. It's so expensive. So let's see if they can scale. And I don't know, but in terms of a trade, definitely long ETH at the moment. Happy to trade it.
I get it. EP 1559 is going to be deflationary on the platform, and I saw somewhere that it's like 3 halvings in one with some of the upgrades they're doing there, and so
sell pressure will be reduced by like 90% or something like that.
Yeah, like no wonder Kobe is all over it, right? Like he's like, I want to make money. Let's pump this thing. I mean, we can close out on this topic, but the thing we should leave everybody with is, what if Bitcoin did that? What if Bitcoin came out and said, you know what, guys, we're going to go super deflationary and we're going to pump this thing? It's actually, ironically, doesn't sound good, does it?
I disagree with you on that, because I don't think people look at BTC, like serious investors don't look at Ethereum the same as Bitcoin. They look at Ether as, well, they look at the Ethereum platform as potentially, it's more of a speculative bet, and then it might be powering the entire decentralized financial world in the future.
But your point is they look at it as something different to Bitcoin, right? They're not looking at it as money. If Bitcoin did that, even though it sounds like, oh, great, we're all going to make more money, you go, yeah,
it's an unstable monetary policy, and it reduces your trust in the stability of why you got into it in the first place.
Yeah,
I think
whereas
ETH is different. You can't categorize Ethereum as the same as Bitcoin in that sense. I don't, and I'm an investor in ETH. Obviously, I'm trading it for the momentum, but I think that you need to look at it as more of a kind of break things, figure it out as we go. It's not money, but it can still accrue value, I think, if it scales and does what it could.
Mick, I don't think you're investing in ETH. I think you're speculating in it. I think most people are speculating in it. And that's why it doesn't need a monetary policy, and that's why it should pump itself. And that's why if it comes good, it comes good, mate. Pump it,
Vitalik. No, I do. Look, I do think it's kind of going into its... it's been increasing on BTC value. So its SAT value's increased since January. Whatever, I'm momentum trading it. I'm happy to hold for another couple of months. It is to accumulate more of the coin, though.
You're a smart man.
What's happening?
So Mick, I think we could probably close out. I did want to play you a video because I thought it would be interesting. Are you interested?
Play me a video.
Yeah. So let me open it like this. Do you think the United States likes having the US dollar and being in a place of exorbitant privilege, or do you think there could be a downside, a dark side to it?
I would say that from the outset, they probably do like having that US dollar dominance.
True. There is a downside to having the global reserve currency, but even more than that, then I'm going to take it to the next. Let's just keep teasing the audience. Do you think that the government could potentially actually need Bitcoin and want Bitcoin in that regard? Because what if I told you that the dollar does have some problems that is being used against them, and that therefore Bitcoin could actually, as opposed to being a threat, could be a way out?
You would want exposure to a global asset class that everyone's using as potentially money.
Do you know why? Or you sort of just you kind of get to I'm leading you.
I'm just guessing this. Like, this is not something I've thought about or written down.
Okay, so I think this is a great way to wrap up the podcast. It's a little bit of a I think it's about 4 minutes. It's from Luke Groman. He was on Real Vision Finance, and Professor Plum, I can't remember his name, Mike whatever his name is on Twitter. He's such a FUD spreader of he's so against Bitcoin, and his point about Bitcoin is the Chinese are going to weaponize it against us. And Luke Groman actually provides an alternate hypothesis, which is actually they've kind of weaponized the US dollar against us, and maybe we need Bitcoin. And so I'm going to play this clip. It essentially explains that. Luke Groman's a lot smarter than me or you. I think I don't want to throw you in the same basket as me, but he's a smart guy. And
okay. I see what you did there.
So I did there. I tried to show some humility and suggest that you're a smart guy. So I'll play the clip, and we can quickly circle back afterwards and then close out. But this will go for a few minutes. It's worth it. Oh, hang on. I got to share my screen. Give me a sec.
Probably shouldn't realize. Smarty pants.
Yeah, that's not good. Hang on. Give me a sec.
But I saw we had a video with Pomp, who's a Bitcoin advocate, and Mike Green, who has some doubts about Bitcoin. And Mike Green was making the case that actually, even though you might think that the Chinese would like to crack down on Bitcoin, maybe actually they want Bitcoin to gain acceptance as a way of actually eroding the US dollar's dominance within the existing reserve currency status. I think obviously that's easier to the degree that they're not a completely open capital account, but I don't have a view that's very strong on that. Have you heard anything around that, and do you have a view yourself?
I have heard that. I think it's a fair point by Mike. I would take it one further. I think there are significantly politically powerful elements in the U.S. that want the same thing. And up to and including the U.S. Defense Department or elements of the U.S. Defense Department and national security intelligence apparatus. And the reason I say that is the dollar system as it is currently structured, and I'm going to be blunt here because you have to be blunt, is there is a growing realization amongst defense and security apparatus and even in U.S. corporations that the way the currency system now works, this post-$71 system, because of how big China's gotten, this system now amounts to the Chinese using the Eurodollar system to borrow dollars, lend the dollars at a spread around the world to buy and control finite hard assets, increases their geopolitical power, increases their economic clout. Yes, they are short dollars, but only to the extent that there is a spread on the loan, and they're lending it against hard asset collateral. So if the weaker emerging markets they're lending dollars to defaults because the dollar gets strong, they end up with the hard asset, which is all they wanted anyway, which further increased their clout. What's more is, and it's crazy, is because there is this dogma around the Eurodollar system and the post-$71 system must be defended at all costs in certain circles, and this is sort of what Mike alludes to, it must be defended at all costs. Whenever the dollar squeeze gets too painful, because China's now so big, because emerging markets are now so big, the Fed comes in and effectively bails out China every time the dollar gets too strong. We saw it last March. So now you've got a Fed-backed Chinese takeover of global economies, increasing their geopolitical power. And the cherry on top of this whole incredible sundae of dogma I don't understand is that the U.S. military defends the whole trade lanes of the whole arrangement. So you've got the U.S. military providing protection for the trade lanes for China to bring back the hard assets of the world that are being financed by U.S. dollar, Eurodollar system and backstopped by the Fed. And I guess I would ask Mike, how on earth does that make sense for the long-term United States? And what I know is there have been, and the numbers are growing, the number of people in the defense establishment, in the intelligence establishment are saying it doesn't make sense. It hasn't made sense for a long time. And so I would say, as it relates to Bitcoin, I think that there are a lot of people in the U.S., in Washington, in the defense and intelligence establishments that want Bitcoin going a lot higher too, for exactly the reasons you say, which is it's going to break this post-$71 system. And when it does, yeah, the dollar is going to fall. Yes, maybe we go from spending $1 trillion a year on defense to spending $500 billion, which would still put us #1 in the world by far. But this counterintuitive relationship where we basically we backstop the Chinese LBO of the world and defend the supply chains while they do so begins to make more strategic sense than it does now, because right now it makes absolutely no sense.
Yeah.
Micky,
Explain that
right?
to the people who
Oh, look, I mean, to break that down is difficult. It would take, I would recommend people listen to it a few times over to try and piece it together. But I guess what they're sort of saying is China can short the dollar by essentially lending it out to the world, right? Because they collect all the dollars. So the US outsources its whole manufacturing base to China. The US exports treasuries to China, as to pay for it, right? That's essentially what's going on, right? Like they're swapping, treasuries for goods. The China has a ton of US dollars. They then lend it out to the world to purchase or to basically put other countries in debt against hard assets. So they give them money to build infrastructure projects in Africa, and so China will give some country in Africa billions of US dollars to build a bridge. Those countries are all in debt to China. And if the dollar gets too strong, China's looking at this because they're like, look, if it gets too strong, they default and we get the asset, which is better than dollars. And what happens is the Fed has to come in and print money to stop that even from happening in the first place. And And then it sort of gets even more detailed in there that on top of all that, you've obviously got a military industrial complex that's going to defend all of that on behalf of China. So it's like China's kind of can kind of hold the world ransom, because either way they win, right? They win if countries default and the dollar gets too strong, and they win if the US has to print more money as it sort of debases its own currency,
Right.
and spends it into China, because China is their number one buyer. So, and you can see what Luke Graham is actually saying is a lot of people might actually want Bitcoin, because the system's not working at all. But I suppose it's a way to also bring the military industrial complex back into check, because they're essentially funded by that system, right? So they're funded to protect the system, and which inadvertently protects China, while China, inadvertently shorts the dollar to emerging market countries to hopefully collect their hard assets, where they went one direction they default, or in the other direction they just keep lending money out and purchasing more and more goods until the world is indebted to them in US dollars. So I don't know. I tried to explain. I don't know how to explain it better than that, but there's a lot in it. But you can see it's kind of almost like whenever I listen to Luke Groman, it's a geopolitical thriller about what's really going on in the world, and I think it goes under people's under their noses without them even knowing it, and saying, "What is money? What is money, Mick?"
That's the fascinating part of it. It's no one knows.
So much to learn.
No one knows.
So much to learn, right?
Yeah, man. Just pump my bags, PBitty. Just pump my bags, all right?
That's all you want, bro. Well, mate, it's been a pleasure. Should we wrap this up? Feels like a long one.
Yeah, it's been real. It's been a couple of hours. If you've stuck around, well done. We are going to come back on Monday. What's our goal for this episode? Are we going to send this out to people? This is our second episode?
Yeah, let's push it more. Let's push a little harder than last time.
All right. We're still working out our formula. We're still working out what works and how we gel and stuff like that. And a name for it. If it goes over 75K within 3 weeks.
It's no longer Micky Does Bitcoin, right?
You've got 3 weeks.
I got 3 weeks to perform. All right. Okay, well, if you sent it to 2 people last time, send it to 4 people this time, and we'll just go from there. That's how exponentials work.
Done. 6 people next week.
That's not an exponential, mate.
Hey,
you got to go to 8.
All right. It's early. All right, PBitty. It's been real.
See you, mate.